Hey, it's Michael Saul with the Stock Market Trading Watch List for Wednesday, September 28th, 2011. Let's take a look at the markets here. I got a couple requests actually for me to stop looking at the SPY on this video since I do the SPY on the other video, which you can always find on the blog. Let me give you that address. Okay, there it is. So you could go there and look at the SPY video, but on this video I'll stick with the S&P cash, okay? So we got to bounce up here into the 78.6% zone of this last swing. And, I was looking at the market action on Tuesday, and I was looking for an afternoon sell-off, and we got one. But I think I was helped along by the news, right? The news came out that the first plan for the Eurozone bailout isn't really being taken favorably. So in my opinion, whatever plan they come up with will just be a small stopgap, and it's going to be more focused on keeping out these issues in Italy and Spain, which they're calling too big to bail. Okay, right? It used to be too big to fail. Now they're saying too big to bail. So as long as they could keep it to Portugal and Greece, I mean, I'm sure the people in those countries are not really happy that they're being used as the scapegoats here. But obviously, I mean, they're trying to put something together. I still believe we're in a bear market. This is classic bear market action. I got some emails because I put out a post that happens to be the most popular post on my blog about, it's called Calling a Bottom, ... really, because I'm reading a lot of people calling a bottom based on this action here. And then after today we went up, somebody wrote me and said, oh, you look kind of foolish writing. And I said, what? So I don't understand. I mean, whatever. If people don't like what I have to say, that's fine. Opinions are like noses. Everybody's got one. Michael Jackson had 3 or 4, remember? But, one day here, this day here on Tuesday, and actually these 3 days, this is not a reversal of what happened. Okay, price equals time. One of the classic technical analysts, I think it was Wyckoff, but I'm not sure. He coined that phrase, okay? So after a move like this, I've been expecting consolidation. If you folks have been watching my videos, everybody, is running out and thinking we're going to crash here and crash here and crash and call crash. And I've been saying we could probably take some time and form a range. Okay, now, could we base here and break out? Sure. But as of right now, the market is not suggesting it. We got volume that was higher than the previous day on Tuesday, right? It was higher than Monday, but it was still lower than Friday, and it was still lower than what we saw last week with the down day. All right, so this is not looking like a bullish market. For now, it's looking like a bear market range, okay, bear market consolidation. Okay, the NASDAQ 100, this is one of the reasons that I wasn't that bullish on after Monday and why I wasn't that bullish during the day on Tuesday, because the NASDAQ 100 was lagging again. Now, it was still up, so it wasn't having a horrible day, and breadth was strong, which kept me safe, right, because breadth has been the queen of the market. So, if you're not looking at that advanced decline line during the day, you're doing yourself a very big disservice if you're day trading. All right, but anyway, so we came up, we fell just shy of the 200-day here. Okay, and the NASDAQ 100 looks like it may want to break it again, but didn't do much the first time it got above the 200-day moving average, so who knows if this time will be different. If it gets rejected here, watch for a retest of the lows down here. Russell had a good day as far as performance-wise, up 2.19%, but look at the candle. All right, rejected these moving averages here. Okay, rejected the point of the breakdown. This is more important than the moving averages. Right, this was the consolidation we had, and this was the breakdown point. Look at this perfect rejection of that breakout point. Why? Okay, because the sellers are defending. This is where it's sold from, and now the sellers are defending. They're distributing. Okay, there's aggressive selling here as we get up to test the point where it's sold off here. All right, so that's the Russell. Semiconductors, rejection as well. Let's look at the banks. Okay, rejection right there. This made it up a little bit higher than that sell point, but it closed back below it. Now, this is not good action, okay? Not good price action. Bank of America closed lower after opening up higher. Goldman, okay, into the 20 EMA. Rejected there, his broker-dealer. Okay, also with that pattern is Morgan Stanley. Okay, Legg Mason. Appalicious. Okay, nice gap opening, but could not hold. That's not a good sign. And I want to watch Apple. I watch Apple all the time. It's a market leader. It deserves its respect, even if you don't trade stocks and you're just trading futures. Amazon with an ugly day also. This isn't a nice day. Supposedly the Amazon tablet's supposed to be released on Wednesday, but do we get a buy the rumor, sell the news kind of event? All right. Amazon's been holding up pretty good. Okay, back to the sectors. I'll mix it up a little bit. Cyclicals with some rejection of the moving averages. Biotechs. Healthcare, they're looking a lot the same, right? Tried higher, got rejected. They're looking a lot the same. Is that even proper English? I don't even know. All right, Research in Motion. Okay, a little bit of a pop, but got a little rejection there too. All right, Electronic Arts. Into resistance here. Okay, oil. Okay, popped up, but got rejected. Gold. I don't know. People are thinking that, the pullback in gold is over. I think it has lower to go. I think the GLD tests the 200-day moving average here at a minimum. Here's silver. I mean, yeah, up 3.9%, but a little bit more, right? This was after hours, but I mean, not really repairing any of the damage that's been done. Some bigger stocks. Here's GE. Yeah, I mean, you can't say this isn't some sort of base forming, but to me, after this move, it's a bearish consolidation. Okay, there's Hewlett Packard. Ugh. Just horrible. Ford. And to the moving averages here. So it's basically the same across a lot of the stocks here. So let's see what goes on the next several days. We have we have window dressing, and then we have the sell Rosh Hashanah buy Yom Kippur tendency, which is real interesting if you go on the internet to read about it, where it's based in. It doesn't really have a lot of fundamental backing, but it's pretty interesting to watch those kind of seasonals. I'm a big fan of the Stock Traders Almanac and stuff like that because, that's technical analysis, studying the past to predict the future, right? Somebody asked me the difference between a chartist and a technical analyst maybe about a week ago. And I had explained that a chartist probably has horse blinders on, and they're just looking at charts. They discount everything. And that's fine. I mean, I had that attitude when I first started, but now I consider myself more of a technical analyst. I believe that the market moves in a technical nature, okay, and I believe you're going to get a lot farther studying the technicals than you are the fundamentals. It's my opinion. All right, don't write me and have some arguments with me, please. But I want to look at other factors. I'm not going to sit here and say, oh, we're at the 200-day moving average, but Europe's collapsing and we have a lot of momentum and to the downside, or a lot of news. I shouldn't say momentum because that's technical, but we have a lot of news coming in, and oh no, I'm just going to close my eyes and pound the 200-day. I mean, that doesn't make any sense. So anyway, that's just my opinion. I'd like to hear yours. You can write me. Don't forget, go to the Stock Market Trends X website. Sign up for the free daily email. I send it out every morning, and I also send out resources and information that will assist you with your trading. So go to that site. You can see the banner in the left corner of the video. I don't know how to make it clickable, but just go to www.stockmarkettrendsx.com and sign up for the list. It's absolutely free. All right, take care. Talk to everybody again tomorrow. That would be Thursday. Have a great trading day on Wednesday.